and good afternoon. This is Dan with your weekly review and outlook, episode number 9, brought to you by the Derivative Technical Analysis program here at Van On and Company. Wanted to go and run through just a few charts with you here this week. We do have really the normal schedule as follows, but first, before we get into that here, I did want to run through the disclaimers. Past performance is not indicative of future results. Futures and options trading involves risk of loss and is not suitable for all producers and nor investors. This is a solicitation. So with that here, we'll get into the outline here for September 30th, 2021. Last day of September. We do see October 1st here tomorrow, and we'll be into Q4 starting here tomorrow as well. So we'll kind of run through the economic calendar first as normal here. We'll run through the quick sheet. Some big updates here in the quick sheet for you today. A lot of highlighted sections that we want you guys to check out here, should you be able to. And then we'll run into two financial charts here, being the NASDAQ and the dollar index. We'll hit corn here and the grain side of things. We'll talk about hogs on the meat side, and then crude oil on the energy side, and then we'll finish up there with copper market again here. In the metals, just to kind of follow up from last week, talk about copper 2 weeks in a row, just to kind of discuss some more developments there. So furthermore, we'll get into the economic calendar first here. I'll just get my screen switched over. There we go. So with the economic calendar here coming in tomorrow, again, Friday, October 1st, China is on a national holiday here. And continues, I believe. We'll check into next week just to make sure how long that goes. But we do have a few CPI numbers out for Europe. Core PC out for the United States as well here early tomorrow morning at 7:30. Also personal spending. So that 7:30 time frame could potentially see some volatility on the financial side of things. We do have ISM manufacturing. Manufacturing PMI as well. Canada has GDP tomorrow, so some decent reports out in the morning, and then obviously we continue with the FOMC speak here from different members. We had a few here today. Powell actually testified. Williams, Bostic, Harker, a lot of them started to talk here this morning, and then a few of them finish up here tomorrow as well. And then kind of wrap up tomorrow. We'll also get CFTC spec positions, hedge positions, and really just kind of see, that updated number on the managed fund side of things as of Tuesday of this week. Coming into next week's session here. Just change my dates up. China is still on that holiday here for coming into next week. Wednesday of next week, a pretty quiet session. We do have ADP, non-farm payroll, employment change there. Monday, very quiet session overall. Tuesday, also very quiet session in terms of just reports overall. You do have some more ISM, non-manufacturing PMI numbers. Thursday, very quiet in China. It looks like the last day that China is on holiday. So, to follow through here, Friday through Thursday, China will be on holiday. And then coming into next Friday here, we have some non-farm payrolls for September, participation rate, private non-payrolls, unemployment rate. Some of those bigger numbers that the Fed and some more economic or economists, I should say, will pay attention to there in terms of how they really view what the economy is doing and how it's doing. So with that here, we'll move on from that economic calendar here, and we will go into the quick sheet here. The quick sheet here today, again, as I kind of mentioned, a lot of different yellow highlighting going on here for today with the posture idea changes taking place. We have 2 in grains, we have 2 in meats, we have 3 in the financial side, and then all of the metals we follow, gold, silver, and copper, all seeing posture price changes here today. So all in all, you're talking 10 contracts here that we really just shifted posture ideas to. So some good ideas, coming across the board here. And as we update those, just as a refresher and a reminder, we do have the table legend and references down here below. A yellow highlight, as per what I was just describing, either means a contract roll, a position adjustment, or a posture level adjustment. So again, it's highlighted yellow here, or the yellow highlights you see today are from a posture level adjustment coming in on the long short bias for these markets here. If you have any questions on that or any of the references, the contracts you follow, do feel free to reach out here. More than happy to run through that with you and discuss opportunities and risk reward off of these levels. From there, we'll run into our charts here for the day. I'm going to start with the dollar index first, looking at a weekly chart here. Coming in, really started to see looks like we're on the 4th week higher here in the dollar index, testing above that 94 level here. We're coming into the 200-day EMA, that 200-day EMA, 200-week EMA off of this chart at 94.10, so 94.10 is kind of what we'll see. We'll see if the week kind of finishes above that or below that here coming in tomorrow. But you can see we have some bigger levels here coming in around that 94 zone, around that 94.60 zone. So we've just started to come into that here the last couple days. And now we'll really see kind of what this dollar index is made of, in our opinion. You have an inflection point coming in at the low here back from March 9th of 2020, and then that's also where you broke down from, right around that 94.60 zone to 94. So keep that level in mind. It's a really key, very key, just overall inflection zone when we talk about long above, short below, or just overall inflection points coming in off of that zone. You see many inflection points coming in past history where we've seen either consolidation around this level, heavy selling or heavy buying from this level. So more or less, moral of the story is incredibly important level coming in for the dollar right now for this market. And we'll see just how much it really wants to participate and continue participating to the top side here. Upside reference level 2 level here comes in at about 95.68, 69. So again, we'll see how much they really want to push into this upper end of the zone in that dollar index. Again, this is a weekly chart. We'll shift down to a daily chart here. And here you can see a little bit more of that, just 3 to 4 week push higher here throughout the month, end of August into September here. And, obviously with this week, seeing 4 days, well, the last 4 days, not including today. So 5 days, I guess, you've seen some really nice gains coming out of this thing. And we'll really just have to see, if we can get, one thing we'll be watching is, can we get RSI, above a 70 measure there? That would really help things just from an overall trend perspective in the chart. Notice the last few times we've rallied and attempted higher, we have not been able to get above 70 on this trend momentum RSI indicator. So that's something we'll be watching for here. If we can do that, that likely points towards a little bit more aggression from those buyers and the ability to go trade up into this zone and possibly above this zone should we see that. If that fails, then we're likely more or less rotating back lower and back into this below 94 into 93.5 type of situation. So keep an eye on that as it affects many of the markets we follow here at Van Ahn & Company, and for sure, obviously the King Dollar, as they say, really drives a lot of these outside markets as well. So, very key to hone in on that. Next chart we'll run through here. I'll just run a quick, I want to touch over the NASDAQ here quickly. If I can get out to the weekly chart here. NASDAQ coming in last week, you had a nice recovery bounce off of, you left more of a tail coming in. We finished towards the high of the week. Then you come in this week and you see absolutely no follow through. That's telling for what's to come. In our opinion, you're either at best you're consolidating, and what's more likely is that you're going down to test. We need to explore some lower levels here. Yes, we're building out a volume node here, right around 760 to 15170 to 200. But again, seeing this, we'll see how we come in tomorrow, of course, for the week, given that this is a weekly chart. But this is not good. This is market generated information that we want to be able to use going forward. And that market generated information is saying, hey, you have a nice candle coming in last week. It's a reversal candle if we're at the bottom of a trend and we see this type of, or at the top, it would be more of like a reverse hammer candle type of situation. But here it's acting as more of a trend continuation. And when you don't see responsive activity to follow through with that, aka higher prices into this week, and we actually take out the lows from last week, that's a big question mark for us. So again, at best, we expect consolidation in this range. More probabilistic would be that we come and test this lower end of the range and possibly come into some of this bigger high volume node area into 13,000. So buyers on notice, longs on notice here for this week with the NASDAQ, and certainly something to keep in mind here. I'll just quickly show the daily chart here. Again, coming in the immediate future, you could certainly see some rallying higher, just from a counter trend perspective. Let's see if I can zoom this in a little bit. There we go. Some counter trend activity into this bigger, high volume node that we're building out. But in our opinion, best case scenario, we build this and consolidate. Again, that's best case scenario. I don't see us really just exploding out of here to the top side over the next month. I could see us trading, to the upside count level 1 here, around that 15,360 zone. But for the most part, consolidation to downside is really the theme here for the time being. We'll run through grains here, and specifically corn. Just going to bring in just a weekly chart here on that corn chart. Weekly levels here on today so far, and on the week we have come in and touched that weekly VPOC high volume node area on the chart. That on the weekly level sits around like that 547.5, 548. The high today, 548.5. So you'll get a good idea of, hey, we met the fair value price here today, and we'll see if we can get through that. I think generally speaking, kind of the theme has been from a contextual standpoint, weekly perspective is, hey, we have some long-term consolidation going on here. Thus far, it is more bullish. When we break out of this, your guess is as good as ours. But what we're seeing right now is just more consolidation. That consolidation currently is sitting in around the lower part of the bigger consolidation. Okay, bigger consolidation would be 638 highs to $6 highs, and then obviously the $5 lows to that 497 low. That's really the wide 50,000 foot view consolidation, and then coming in a more direct where we're at right now consolidation kind of points towards that VPOC, which is around that 548, 550 zone, down to that lower end of $5 to 497. So we're on the bottom half of the bigger consolidation zone. Obviously we have a top half as well up in here, so we'll see if buyers really want to get aggressive enough. We'll see if sellers get aggressive enough to kind of come back and test the lower end of this range, but understand that this range is still continuing to build out, and we continue to kind of build around this VPOC on the weekly level. And of course, coming into the daily chart here, this is where you see coming in today, more of a neutral type of candle. That we would consider that more of like a doji type of candle to say, hey, the recent uptrend is more or less on notice here. We'll see again. You come through. Does this, if we take out today's lows, does that bring us to an opportunity to test the 200-day EMA again? That's going to be a scenario that we have, good volume coming in here today with that report. So see again what happens here. The main point is just to kind of highlight this consolidation zone from the more smaller time frame area, from that VPOC down to that $5.497 low there. That's really going to be that consolidation zone that we're zoning in on, at least for the time being, until we get outside of that. And should we get outside of that, then you want to be attentive, of course. So that's really the situation at hand. With the next chart here, we'll run into the hog market, run through the DECE chart, and I'll see if I can get a. All right, so seeing some really good follow through here. If you take a peek at our weekly outlook a week or two ago, kind of just discussing the opportunity that these weekly charts give to just kind of understand the context, the range that we're expecting, and just kind of seeing where buyers step in. So you had more of a reversal week coming in 3 weeks ago, so it would have been actually 2 weeks from tomorrow. And then last week, so a week ago from tomorrow, you had a nice finish to that. So that two candle stretch there, really had sellers on notice, and buyers were back in control as of really the middle of last week, towards the end of last week. So now you come in this week and you follow through, and really the goal is to get back to the VPOC. We've actually tested the top side of this range here, or at least the top side of the higher volume node here, really coming into that 85.5 to 86 zone. We'll see if this range kind of keeps things from getting too aggressive to the top side and more or less centered in around this VPOC. That's going to be more from our perspective. Excuse me. We're not really wanting to push this on a breakout. We'd be more inclined to, if you're long already, be protecting that, be taking profits up here, and then be getting ready to roll this thing back over and really centering around this VPOC. I think at the end of the day is really the goal there. Until we see some more consolidation, again, overall broad perspective, this is very healthy for the long term. Again, this is a December chart, so we'll have to go out and see just how long term this really wants to be. But from a long-term consolidation standpoint, the more this consolidates, the better the 50,000 foot contextual view standpoint. From a follow-through standpoint to the top side, gives us that probability in that consolidation to see higher prices there. And we'll just quickly go over that daily level here to get you a couple more tighter detailed levels, I guess you could say. So obviously the high coming in here, you have a gap coming in from that sell-off back in June 14th to June 15th. Sellers were met here from that level. It looks like we're coming in and trying to test this here now. We have a gap from yesterday's close. We'll see if we can take out this gap. But again, you start to get very thin up here, like we're discussing. As you get into 88, 89, 90, it's just very thin up there. So your risks to continue pushing higher is on notice to a certain degree there. So just kind of be aware of that. Also, just a couple gaps left in these charts, very strong to see. And this would be more of your breakaway gap. This would be more of your trending type of gap, where you can kind of see not an exhaustion gap by any means, but just more of a middle of the trend type of situation there. And again, the VPOC sits in around that 81.43 with the higher volume nodes in and around that zone. So that, again, in our opinion, just from where price is traded, that's going to be a magnet, or likely to be a magnet in the following weeks here as we go about. Next chart we'll run through is that crude oil market. Crude oil seeing a pretty decent week here overall, just from a back and forth volatility standpoint. See what we can get this chart to come to. There we go. You can see we're kind of testing this top end of the range here again. So if you followed our weekly updates here, it's been more or less, hey, this level here to the top side, that's yellow shaded zone, this is going to likely offer, initial resistance, and see if we can test this. So far we've tested it and failed. We'll see if we can test and break through this to really challenge higher prices. But from a weekly level here, you really have, again, this consolidated effort coming in. We've now traded this range. We've established it to the highs. We've traded it to the lows now, and we've now come back and tested it here on this week. And we'll see if they have enough gumption to really push this higher. But again, in our opinion, the best situation that we believe, from a healthy standpoint would be, crude oil trading sideways for a little bit in this market, or in this range, I should say, and really building out this profile to garner up enough momentum to then push towards that 93 zone eventually from that weekly perspective. If they do intend to break this thing, higher, and again, the break would be, above that 76 to 76 and a half level, then you're likely talking, we are going to try and test some of this thin profile, but I would be very careful with that, really chasing. You're probably talking $79 to $80 before we start to see some sellers in there. That's another $4-5 of upside on a breakout level there. So from your time frame perspective, that's something we can talk to you about, and then obviously managing those expectations. Would love to run through those with you and kind of see like how that fits for your narrative of a trade, of a potential trade here, and just how that really sets up contextually, because it can work for somebody and not work for the next. So we're really just trying to figure out who it might work for, and what the objectives and overall risk structure contain. Again, you'll see on the daily chart here, high side, you're seeing this higher end resistance zone, confirm itself this week here. 2 days ago on Tuesday, we saw some selling. Now we have some bigger volume coming in here today with a nice kind of snapback after falling here. So even if it consolidates up here for a couple days, it may very well be a pretty healthy situation, not becoming oversold or a measure below 30 on this last run here. You've heard us talk about that many times in different contracts. Very positive to see from an overall trend perspective. So again, even if we do get more of a fall, and a decline back into the VPOC around 70 to 68 bucks, it's still a solid market, and it's still a good upward trending market that we believe eventually does break out. It's just a matter of, do we need to see more consolidation, or do market participants just try to send this thing, right off the bat here on a second test? And the last chart here we'll run through is that copper market. Copper currently down 9 cents here on the day, testing the lower end of the range that it's been in, really coming into our first downside reference zone around 404. We did kind of note this again last week of just saying, hey, much like a few of these markets, we're in that consolidated type of structure right now. If I can learn to draw a line here, we're in that consolidated structure right now. Copper is one of those where it's really just trying to build out this volume node. It's healthy for the underlying long-term trend here. You get this long drive higher, sideways consolidation, sideways chop. You can trade both sides of it here in this consolidation to the long or short side. But again, understanding that down around this $4 zone, there's some decent support around there, and even as you get into 380 and 385 to 380, there's going to be some decent support there. You obviously have this bigger volume node, but just below there, that comes in about 360. That would be more of a target upon a breakdown of this. But until we break down, you really have to, be of the understanding or be of the contextual standpoint that we're going to sit this thing in this range, and you want to be buying the lower end of this range, targeting top side levels, and then selling the top side and targeting lower end levels. I don't think we moved these upside or downside reference points for quite some time here. I'd actually love to go back and look to see when the last time we moved those, just because this has been the story for copper for the last few months. and we kind of want to stick with that until it shows us and gives us something different from that perspective. When we go down to a daily chart here, again, you'll see that 200-day EMA coming in. We bounced off that now, or at least trying to. We've tested it 3 times here, currently 3 days, or the third time being today. We'll see if we get responsive buying off of that. VPOC coming in and sitting at that 427 area. So again, likely going to act as a magnet there. If you want to be more of a minimal risk type of trader, you'd be buying and trying to buy without confirmation down around this $4 zone, seeing if we can rotate higher into that VPOC and beyond. If you're looking for confirmation, then you're looking for more a test of this zone, waiting for buyers to show up, and seeing more reversal characteristics at these zones to say, hey, somebody's stepping in here before me. Let's jump on with them here. So that's really the context here of what we're currently seeing in copper. Again, not seeing oversold or measures below 30 on this thing quite yet. So, that sideways consolidation that we've been talking about and just hammering home on this market and this contract continues to see that from a trend momentum perspective in RSI. As always, if you have questions on any of these charts or any of the markets that we discuss, contracts that we discuss, risk reward, quick sheets, videos, etc., please do feel free to reach out. More than willing and more than happy to walk through any of those questions with you. I do want to close here with a disclaimer for you this week. Past performance is not indicative of future results. Futures and options trading involves risk of loss and it's not suitable for all producers and or investors. And just a reminder, this is a solicitation. I appreciate everybody being with me here watching this video. Again, any questions, don't be afraid to reach out to us. And with that, have a great afternoon, great evening here. If I don't talk to you here coming in towards the end of the week, have a great weekend and we'll be in touch soon. Thank you.